Bill Ackman is a billionaire investor who knows how to make money from the ups and downs of the real estate market. But what does he think about the current state of the housing sector? Is it booming or busting? How can you profit from his insights? Come, let's find out more. Bill Ackman is a very rich person who manages a company called Pershing Square Capital Management. He's from Chappaqua, New York, and his dad used to be in charge of a real estate finance company. Ackman went to Harvard and got degrees in social studies and business. In 1992, he started a company called Gotham Partners with a friend from Harvard, and they made small investments in public companies. Later, they tried to buy Rockefeller Center but didn't succeed. Despite that, Gotham became successful, managing $500 million by 1998. Ackman is known for his bold and sometimes controversial investment strategies. In 2002, he challenged the good rating given by Standard & Poor's to MBIA, a company. He believed MBIA was not doing things right and made a lot of money by betting against them during the 2008 financial crisis. Now, let's talk about houses. Recently, the housing market hasn't been doing well. The prices of homes are very high and interest rates are going up. In 2021, things were better for people wanting to buy homes because of the COVID-19 pandemic's second wave. Many people who were stuck at home during lockdowns decided to buy bigger houses since they were working from home. Also, the government gave some benefits like lower home loan interest rates and reduced fees. Even though the housing market was recovering from a long slump, prices were steady, making it a good time for people to buy homes. However, by 2023, the market dynamics will have changed significantly. SOPs offered by different state authorities have run their course. Home loan interest rates have begun to surge. They're nearly at pre-COVID-19 levels, and developers are steadily raising the prices of homes as raw material costs and the overall cost of construction have surged. This has resulted in a decrease in demand, sending real estate on a downward curve. Bill Ackman is a successful hedge fund manager known for his bold investment strategies. His influence on the real estate market is significant, as he has been involved in various high-profile deals and controversies. The real estate market, on the other hand, is currently experiencing a downturn due to a combination of factors such as rising home prices, increasing interest rates, and the end of government incentives. This has resulted in a decrease in demand and a shift in market dynamics. So, what is meant by real estate? The term refers to land and anything permanently attached to it, such as buildings or natural resources like water, minerals, or crops. It's a type of real property, different from personal property like cars or furniture, which aren't attached to the land. Real estate can be categorized into residential, homes, apartments, commercial, offices, malls, industrial, factories, warehouses, raw land, undeveloped property, and special use, public spaces like parks or schools. Investing in real estate can involve buying a home, rental property, or land. Changes to the land that affect its value, like building a house, are called improvements. Real estate plays a significant role in the economy, affecting wealth, jobs, and more. The real estate market plays a crucial role in the economy. It affects the economy in several ways. Wealth effect. Real estate makes up a large portion of individual and business wealth. When real estate prices rise, wealth increases, leading individuals and businesses to borrow and spend more. This is known as the wealth effect. For example, about 63% of Americans own their home. When home prices rise, homeowners' wealth increases, making them feel more confident and likely to spend more. This surge in spending can have a strong positive effect on the national economy. Debt. The flip side of spending is debt. An increase in home values affects borrowing behavior. During periods of rising home values, families and businesses are more likely to take on debt because the underlying assets they borrow against have increased in value. Banks, too, are more likely to lend because rising home prices mean they will be able to recoup more of their losses in case of a default. However, a surge in risky lending can lead to a bubble, as was the case during the subprime mortgage crisis of 2007. Owning a house can impact how much money a family has. When you own a home, you build up something called equity over the years. This means the house becomes more valuable. Families can use this increased value to get some extra money for different things, like spending or investing. One way to do this is by changing the terms of the home loan to a larger one, a process called refinancing. The extra money that comes from the new loan beyond what is still owed on the house can be used by the family as they need. When interest rates are low, many families might choose to do this, and it can contribute a bit to spending in the overall economy. Jobs. Fluctuations in the real estate market also affect jobs. Real estate construction is labor-intensive and a major force in job creation. The drop in housing construction was a big contribution to the recession's high unemployment rate. Ripple effect. The housing market affects many parts of how well the economy is doing that we don't always measure. When fewer houses are being bought, the prices of all homes go down, even for those not being sold. This means the value of people's homes drops, and they might not be able to borrow as much money using their homes. This can lead to less spending by homeowners on things like home improvement projects. Since a big part of the US economy depends on people buying things, if they spend less, it can make the whole economy worse. This can cause problems like more people losing their jobs, making less money, and spending even less. If the people in charge, like the Federal Reserve, don't step in and try to help by lowering interest rates, the whole country might end up in a tough situation, like a recession. The housing market's ups and downs have a big impact on how the economy is doing. It affects how much money people have, how much they owe, and even the jobs available. This influence spreads to other parts of the economy. So, leaders and experts must keep a close eye on the housing market to understand how well the overall economy is doing. Also, the government's decisions can have a big effect on the housing market in various ways. Regulations and zoning. Government rules can impact the kind of property you can purchase, how much it costs, and where you can live. Zoning laws, for example, decide what kind of buildings, like homes, stores, or factories, can be built in certain places. These laws set rules about what someone who owns land can or cannot do with it. Tax policies. Government tax policies, such as property taxes, can affect the cost of owning real estate. Higher property taxes can make owning property more expensive, potentially discouraging buyers. On the other hand, tax incentives or breaks can stimulate investment in certain areas or types of property. Interest rates. While not a direct policy, the government influences interest rates through its central bank. Lower interest rates make borrowing cheaper, encouraging people to buy homes or invest in real estate. Conversely, higher interest rates can make real estate investments less attractive. Housing policies. Government housing policies can affect both homeowners and renters. Policies that favor homeowners, such as mortgage interest deductions, can stimulate demand for homes. However, these policies can also drive up home prices, making housing less affordable for renters and first-time buyers. Infrastructure development. Government decisions on infrastructure development can boost the value of real estate in an area. For example, the creation of new roads, schools, or hospitals can make a location more desirable, driving up property values. Environmental regulations. Policies related to environmental conservation can also impact real estate. For instance, regulations protecting wetlands or endangered species can limit development in certain areas. Economic policies. The real estate market is a complex system that is influenced by various factors, including government policies. In fact, government policies play a significant role in shaping the real estate market. They can affect not only the cost and desirability of property, but also the level of investment in the sector. For example, policies aimed at stimulating economic growth can lead to job creation and increased demand for commercial and residential real estate. When the economy is growing, businesses are expanding, and more people are employed. There is a higher demand for office space, retail shops, and residential properties. As a result, the real estate market experiences an increase in prices, rents, and transactions. On the other hand, policies that restrict investment or impose taxes on real estate transactions can have a dampening effect on the market. Such policies can lead to a decrease in demand and a reduction in prices, rents, and transactions. Therefore, it is crucial to understand government policies and their potential impact on the real estate market when making decisions about buying, selling, or investing in real estate. Bill Ackman has made billions by betting on the real estate market. But he has a shocking revelation. The housing sector is heading for a crash. How can you protect yourself from the fallout? And what is his secret strategy? Comment your thoughts on this and don't forget to like, share, and subscribe.